higher interest rates, recession, bloodbath in 2024, higher wages, higher inflation, wage growth which will fuel higher inflation, big companies falling by end of this year and through 2024. Everything in this video. If you are worried about what's happening with UK economy and around the world, this video is for you. Please watch till the end and you will not be disappointed. Let's get started. Okay, we have one good news and one bad news. The good news is UK wage growth was 8.5 including bonuses, and excluding bonuses 7.8 year to date end of July, which is a good news for consumer itself because obviously their wages are now growing faster than the inflation consumer price index. But the problem here is this can fuel the inflation even more and make Bank of England's job even difficult to control inflation. And the impact would be far destructive than it on surface it looks. Why? Because obviously if wages are growing more than the consumer prices, that means a central bank has to increase rates further for monetary policy to be tight enough that wages are not growing faster than the consumer prices, so that CPI could come to their target of 2%, which with this scenario is very unlikely. So what we can expect in coming months, actually on 21st, Central Bank of England is meeting again to decide whether they're going to increase the rates or not. Personally, I feel that September is going to be a skip, and maybe the next meeting they will have another increase because they want to have more data in front of them to make decision. But we don't know yet. We will see on 21st when they actually announce. But on the surface, it may look good, but underneath its UK economy, as we all know, is crumbling, and there are so many underlying issues, and this issue is actually adding on the existing issues already Bank of England faces. So personally, I think that we have some tough times ahead of us, higher interest rates for much longer time than we anticipated. Probably throughout 2024 we will have these levels maintained, probably 6% base rate, and where retail rate could be as high as 8%, 7 to 8%, which is going to be destructive, and companies will obviously have earnings recession very soon. You may have already started seeing some distressed news in the media. As you already know, Wilkinson's, one of the largest home retailers, has fallen, and almost 12,500 jobs have been made redundant. Today, Barclays Bank has announced they are making 450 employees redundant. This will increase, the pace of this will increase as Bank of England increases rates to further highs. What I would suggest is prepare for the worst, guys. This is not worse. I personally think, yes, inflation may have peaked, but interest rates haven't yet. In coming months, I think, we will see the peak of interest rates end of this year, and then maybe Bank of England will say, okay, we are staying at those higher levels until end of 2024, unless the recession comes and we see some domino effect starting from obviously Wilkinson, and then maybe few more big giants falling and unemployment rise. If that happens, then maybe we see interest rate cuts maybe in second half of 2024. But 2024 is going to be very rocky and very tough for many people. But again, it will present so many opportunities for those who have cash in bank. You will have a lot of opportunities, especially those who are in property and want to invest in property and have cash ready, not on mortgage or not on bridging loan, but cash ready. There will be so many opportunities presented to you, but unfortunately that will not come without paying the cost of higher repossession rates, especially on commercial real estate and residential real estate as well, especially properties which are priced above 300k and bought within last 3 to 5 years. If somebody bought the property within last 3 to 5 years and they bought it under the affordable home schemes, then most likely those are the people will be hit the worst, and commercial properties, especially pubs, restaurants, factories, warehouses, these are the properties which will be coming to market in coming months and probably a year or so. Commercial property, probably I would say this is the only opportunity in the history of commercial property. The amount of commercial property will be coming to market for selling. This is going to be the only opportunity for large scale shift from work from the office to work from home, and businesses shifting digital, shopping malls closing down, banks closing down, pubs closing down, restaurants closing down, factories closing down. So the effect of that is certainly going to be felt in coming months, guys. I wish everybody best of luck with what's ahead of us. All we need to do is just be proactive and not reactive when it actually hits us and then we react. That is not the best way. Understand that it's coming, starting from Wilkinson, maybe Wilco, which is broadly known. I think they recently, about a few years ago, they rebranded from Wilkinson to Wilco. But starting from them, 12,500 job lost, and more coming. I would personally think that with this much restrictive rates, if it goes to 6%, then we will see some big names falling, guys. If you think you will be affected, please start planning now. Now is the time. Start talking to your bosses. Look at their financials, how badly in debt they are. If they are hugely in debt, chances are that you will be made redundant very soon. Very soon means within 6 to 8 months. So all we can do is plan and act accordingly, just to have something on side to support you through these difficult times. If you think this video has helped you, please don't forget to hit the subscribe button and leave a comment below. Voice your opinion. Let me know what you think about current situation, and with these higher interest rates, are you planning to purchase a property, your first home or investment property? Are you waiting for that, or are you worried about your savings or your job? Please do leave a comment below. Let's work together. Let's support each other in this journey. Thank you, guys. Thank you for watching.